Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. Today, we have all the fun talk. We're going to be talking about miners and what's going on with the bear market. This mostly pertains to large mining firms and their inability to capitalize on the bull run in time to survive the bear market, but that does affect, of course, smaller miners as well, all myself included. I'll be talking about that from my perspective here a little bit too. We're also going to be talking about how to make money from the crypto backlash, as well as Bitcoin miner Riot Blockchain does name its corporate operations head as new CFO. And we have Nvidia and AMD gain GPU market share while overall shipments decrease by 19% in Q1. And AMD coming out with a new 10 gigabyte variant of the RX 6700 that will be launching on June 9th, which is kind of out of nowhere. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options including wire transfers to easily receive your profits. Crypto.com also offers additional services including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, at the beginning of the show, we usually cover miner releases. We don't have any current miner releases going on right now, so we're just going to hop right into the news articles. AMD readies Radeon RX 6700 10 gigabyte graphics cards. First custom models from Sapphire are pictured, allegedly launching on June 9th, coming from WCCF Tech. AMD is preparing a brand new RDNA 2 graphics card that launches this month, the RX 6700, based on the Navi 22 GPU core. The AMD RX 6700 will be a cut-down variant of the 6700 XT graphics card. It will be based on the same Navi 22, but in a different SKU configuration, while the AMD RX 6700 XT features 2,500. This is weird. Okay. 2,560 cores. The Navi 22 XL GPU on the 6700 will feature just 36 compute units. There we go, compute enabled for a total of 2,304 cores. The GPU will also feature 80 megabytes of Infinity Cache, reduced from the 96 megabytes on the full Navi 22 GPU. The card will also rock a cut-down memory bus of 160-bit, womp womp, and feature 10 gigabytes of GDDR6 memory versus the 12 gigabytes and 192-bit configuration that the top variant has to offer. Unfortunately for miners, this doesn't mean that we get a cheaper GPU that potentially has the same memory performance, which would be kind of ideal, right? Keep the 192-bit bus, keep the same speed, just have 2 gigabytes less and cut down the cores and stuff, and then we have, you know, a good memory intensive algorithm GPU that should be cheaper than its bigger brother. This happens sometimes in with different variants of different GPUs. Unfortunately, that doesn't seem to be the case here. It will come with a TBP, a total board power of around 200 watts, and most designs will utilize a single 8-pin connector. Display outputs will include a triple DisplayPort 1.4 and a single HDMI interface. As for the custom variants, Sapphire seems to be working on 2 models, a standard reference and a pulse variant. Both are dual slot and dual fan designs will be clocked at 2,330 megahertz game and 2,495 megahertz boost clocks. The memory operates at 16 gigabits per second speeds, so we get a 320 gigabytes a second of bandwidth. You can also note that the frequencies themselves are a 94 megahertz gain and an 86 megahertz boost clock reduction versus the reference RX 6700 XT graphics cards. As per Cal Cotland, the AMD RX 6700 graphics cards are expected to launch on 9th of June for a price of around 550 euros. That's really expensive too. It will be an interesting card considering this is the third Navi 22 variant for the DIY segment. AMD also recently launched the faster 6750 XT graphics card. It is currently unknown if we will see more AIBs release custom variants of this card or only the AMD exclusive partners such as Power Color, Sapphire, XFX, etc. And so if we do have the chart here, we can slot it right in. I believe it's right here. So we'll just go down. If we compared that, to essentially above it at 384 gigabits per second, we get the 6700 XT, and below that, the 280 gigabytes per second on the is that the 6650 XT? Yeah, so let's bounce one down below that at the 256. It doesn't have the faster memory, so it doesn't have the 17.5 or the 18 that the 50 XTs got. So it will be getting the slower memory of the 16 gigabits per second that we have been seeing. However, as we experienced in the testing of the 6650 XT and the 6750 XT, unfortunately, that faster memory speed did not translate into higher hash rates. In fact, it translated into lower hash rates, most likely due to memory timings being loosened up to hit those higher memory speeds. So I don't expect extremely good performance out of it. However, it is an interesting slot in at that 320 gigabytes a second. The pricing just isn't there, right? So let me know what you guys think of this GPU. I don't have high hopes for it. The only positive that we could really get out of it is that it does have a slightly larger bus than the 6600 series below it at 160-bit bus. But you're probably just better off going with like a 6700 XT. It still is baffling to the mind, to me, that we have 432 gigabytes per second on the 6750 XT compared to the 384 gigabytes a second on the 6700 XT, yet it performs worse. Same story, of course, with the 6650 XT having 280 gigabytes a second versus the 6600 XT, which has 256 gigabytes per second, and once again, not performing as well. This is just kind of an odd duck as well, because I just don't know if this ends up, it would be really odd if this ends up because of the tighter memory specs being a better option than the 6050 XT models, right? The 6X50 XT models. It could be one of those ones where it just does the opposite of what we think it'll do and it gets really good hash rates. It could potentially get up to that 40 mega hash a second, 40 to 45 mega hash a second, judging off of the total bandwidth, but it's hard to tell exactly until it is in hands, right? So that's it. That's it. What a weird release. In more graphics card release news, or not release news, in more graphics cards news, we have Nvidia and AMD gain GPU market share while overall shipments decreased by 19% in Q1. Intel's Arc still missing. The latest GPU market share report has been published by JPR and shows that the overall market declined by 19% versus last year, while both AMD and Nvidia gained a bit solely in terms of market capitalization and not shipments. Recent global events have been highlighted as the main cause of the market slipping down by 6.2% versus the previous quarter, Q4 of 2022, while we saw an overall decline of 19% year over year. This is lower than the annual growth rate of 6.3%, which is predicted between 2022 and 2026 to reach an install base of 3.3 million units, while the penetration of discrete graphics cards is expected to hit 46%. Obviously, they want to put this on other outside events. It does appear that they aren't, once again, acknowledging the impact of cryptocurrency mining, specifically GPU mining, as it pertains to Ethereum and all of that. Let's see if that does get mentioned later in the article, though. Coming to the vendor breakdown, Nvidia saw the biggest market share increase of 1.69% and now stands at 21%, while AMD's market share increased 0.7%, hitting 19% total GPU share. That's actually pretty big for AMD. Intel's GPU saw a decline of negative 2.4% and currently stand at 60% market share, keeping in mind, of course, that's highly due to their iGPUs, not to their discrete GPUs. Oh, it does mention that here. The reason for Intel's GPU market share still being so high is because of all their CPUs with the iGPUs are accounted for in the report. The overall shipments for Nvidia increased by 3.2%, while AMD and Intel saw a decline of negative 6.2% and negative 1.5% respectively. The discrete GPU market share is a different story, where Nvidia retained 78% market share from the previous quarter. AMD declined by 1% to 17%, and Intel saw a negative 1% decline down to 4%. Note that Intel's Arc GPUs were introduced at the tail end of Q1 2022, so they have yet to amount to any significant market share yet. Plus, they haven't really gotten a huge release, right? So we're still kind of waiting on the discrete GPUs from Intel by all accounts, except for in some minor markets and their OEMs. The GPUs are also limited to certain markets at the moment, so they won't be amounting to any significant market share till the end of 2022. I keep saying exactly what the article says in the next line when I'm clarifying, which is pretty funny right now. Quick highlights. The GPU's overall attach rate, which includes integrated and discrete GPUs, desktops, notebooks, and workstations to PCs for the quarter was was 129%, up 5% from last quarter. The overall PC CPU market decreased by negative 10%, or decreased by 10% quarter to quarter, and decreased by 26% year to year. Desktop graphics add-in boards, AIBs that use discrete GPUs, increased by 1.4% from last quarter. This quarter saw a 16.5% drop in the tablet shipments from last quarter. We also have more data coming from tech analyst Mike Brizone, Camp Marketing, who has reported a discrete GPU share of 80.67% for Nvidia and 19.43% for AMD. According to the new statistics, first week of 2022, Nvidia's Ampere GPUs amount to 84.87% market share, while AMD's RDNA 2 GPUs amount to 15.23% of market share. For the AMD GPU market share, the breakdown is as follows. It goes through that. Basically between commercial, workstation, desktop, and mobile, with desktop taking the lion's share at 88%. On the, let's see, for the GPUs, you're looking at the desktop taking the lion's share at 72%, but they do have more going on, of course, in the mobile segment, especially recently, with obviously their tablets and all that sort of thing, to where they do have a portion of the segment there that AMD really isn't tapping into quite yet, but they're getting, AMD's getting there. They've been working on that, through the APU process and all that. So with the price dropping and graphics card vendors picking up their marketing game for the gaming segment, we can expect GPU shipments to increase in the second half of 2022. Both Nvidia and AMD are also expected to launch their next generation lineup later this year, which will also push shipments further up. So there you go. We have basically a decline in, obviously, the GPU market, primarily due to, of course, the cryptocurrency market as I see it, because that is what is primarily affecting the shipment of a lot of these GPUs. We know that because we have been doing the polls and asking people if they're purchasing GPUs, and a majority of you guys are not in the current state of purchasing actively GPUs due to the cryptocurrency markets and, of course, the Ethereum merge getting closer and closer. Bitcoin miner Riot Blockchain names its head of corporate operations as new CFO. Current CFO Jeff McGonigal, something like that, will retire and move into a new role as senior advisor of the miner in mid-August. I don't know how relevant this is, but it is a big mining company, so I like to keep track of it. One of the largest publicly traded Bitcoin miners, Riot Blockchain, appointed Colin Yee, its current head of corporate and financial operations, as the new chief financial officer, effective August 15th. Quote, "We are pleased that Riot's current operational momentum will continue unabated as Colin Yee steps in as our new CFO to help the company achieve and exceed its strategic goals," end quote, said Jason Les, CEO of Riot, in a prepared statement. The change in CFO comes as the shares of the miner have fallen about 72% this year, in line with its peers Core Scientific and Marathon Digital. The Bitcoin mining industry has been rocked by Bitcoin's declining price since November. On May 10th, Riot reported its first quarter earnings. Revenue missed estimates, but the miner maintained its hash rate guidance of 12.8 exahash per second. The current CFO, Jeff McGonigal, will retire from that position to become a senior advisor to Riot as of August 15th, according to a statement. McGonigal is expected to remain employed by Riot through the terms of his employment agreement ending February 7th of next year. To ensure a smooth transition, after that, he is expected to enter into a consulting agreement with the miner. Yee, who is a chartered professional accountant, CPA, joined Riot as head of corporate and financial operations in April. Prior to Riot, he was the chief operating officer and CFO of a family office with controlling interest in companies focused on construction and geothermal systems, according to the statement. On March 23rd, Riot's former chief operating officer, Megan Brooks Anderson, exited her position after 1 year at the company. So they're obviously changing hands over and over. The good news here is it does sound like Yee has the experience specifically as a CPA, as well as, of course, experience within geothermal systems, I think, and construction. I think from that perspective, he probably is a better fit for running that company from the CFO perspective. Probably a smart move as far as all of that is concerned. Now, there's an opinion article here. I want to go over it and get you all's thoughts on it from CoinDesk that says how to make money from the crypto backlash. It says, welcome to the hype, disappointment, devastation, education, conviction, hype cycle. So all of this is, like I said, this is a repeat. This is just history repeating itself within the cryptocurrency market. It just appears to repeat itself a lot quicker than other markets, and seems to do so, of course, surrounding that traditional Bitcoin supercycle, which is based on the halving of Bitcoin. And the halving of Bitcoin is a reduction of the newly minted Bitcoin that is paid out to miners for solving blocks. In the wake of a more than 50% price drawdown in major cryptocurrencies and the collapse of some huge financial experiments, public sentiment on crypto has done a predictable 180-degree turn. It happens every few years. A crypto price bubble draws in a new wave of speculators. Many of them get burned after making bad bets on technology they don't fully understand, and sentiment swings hard the other way. We've gone from the era of Davey Day Trader doing cute things with Dogecoin to surgeons in Massachusetts losing their life savings on Luna. True, blue chip tech stocks like Meta and Netflix have lost nearly as much as Bitcoin in dollar terms over the last year, but we'll set that to the side. The crypto backlash is here, and it's taking extremely familiar forms. Jackson Palmer, who initially created Dogecoin as a performance art critique of crypto, is making a new round of skeptical declarations. Molly White, founder of the anti-crypto blog Web3 is Going Just Great, is getting profiled in the Washington Post. The skeptical Crypto Critics Corner is suddenly one of the top technology podcasts in the world. And good for all of those largely constructive and incisive critics. Having a healthy presence of informed critical voices is a plus, not a minus, for any serious emerging tech sector. But the broader backlash is going to produce much more worrisome nonsense, including its own set of evasions and misrepresentations. Chelsea Manning provided a sterling example in an interview published Tuesday in which she did an awkward crab walk around the word cryptocurrency when describing her work for a project called NIM. Manning described herself as a crypto skeptic and attempted to explain how her project that uses a blockchain to supposedly preserve privacy isn't part of that industry. But NIM has a token which incentivizes network maintainers, and look, folks, it's a cryptocurrency. Chelsea Manning is helping start a cryptocurrency, and that's actually fine. Manning is a champion of privacy and democracy, a person we should all look up to for a few reasons, and it's heartbreaking she feels the need to do this crypto skeptic kabuki. I don't even know that word. I gotta look that one up. While taking checks from a crypto startup. The idea behind the NIM project also seems debatable. If you're trying to protect citizens from government surveillance, a blockchain is maybe not the place to start. Sorry. Getting crypto shamed by a renowned privacy advocate pitching an iffy token project, that's the very definition of down bad. And the wave of smug skeptics is not going to slow down anytime soon, partly because this crash has clearly found its villain and fall guy in the form of Do Kwon, whose $68 billion Luna Terra USD stablecoin paired imploded in early April like a pair of retracting testicles. Jesus, this guy's going hard in the paint. I say both villain and fall guy because he'll be remembered not because he triggered the broader market crash, he maybe kind of did, but because he and his work embodied all the worst excuses of various screw-ups, improvisers, hype beasts, and charlatans who made the crash possible. In previous years, that dunk tanker might have been Mark Karpeles of Mt. Gox or Harold Cotton of Quadrica CX. But this time, after crypto reached levels of public exposure it has never seen before, it's Do Kwon. He's going to be all over TV for months, having such a living embodiment of egotism, venality, recklessness, and stupidity. Standing in for crypto as a whole is going to make things measurably worse for the industry. And you should absolutely be mad at him about this in addition to everything else. I don't know about that. Why would you blame it all on a single actor? Part of this, like I said, is like cyclical. This is a repeatable process, right? And usually there is some sort of large event surrounding some sort of large project that goes under that does make things look even worse than they actually are if you sit back and take a deep breath and wait till 2024, right? It's going to be a rough stretch, and nobody actually knows how rough or for how long. Many of us have seen this show before. While there are variations, the crypto retrace cycle has repeated 4 or 5 times now. Each time the same behaviors crop up as crypto goes from mania of the month to whipping boy. The good news is the retreating tide also presents opportunities. But the thing is, people will continue to enjoy taking investor money, considering signals like Andreessen Horowitz's new $4.5 billion crypto investing fund, a decent amount of capital, may still be on offer even with public sentiment of crypto in the toilet. So you'll hear a lot of squirming and doublespeak like Manning's as people who still want that sweet, sweet crypto cash try to downplay their actual crypto activities. Manning's invasion is a close cousin of the all-time great in this category. The argument for blockchain, not crypto. This is a meaningless concept because tokens with economic value are fundamental to the design of distributed public blockchains, at least for the moment. But rhetorically, blockchain, not crypto, is meant to signal that one wants all the cool parts of blockchain tech without the financial volatility. Quote, blockchain, not crypto, end quote, has in previous downturns been a particularly attractive line for blockchain units within large corporations. Not coincidentally, one of actually executing on the hollow premise of enterprise blockchain is with tightly controlled private networks, which may have some limited long-term promise, but nothing remotely resembling the weird transformative implications of public blockchains. It's a rhetorical feint, meaning meant to trick people who sway with the breeze of shifting sentiment and don't actually understand crypto at all. So here's living in the winter. Simply ignoring these craven contortionists is step one of thriving during a crypto winter. Another good move is to try and understand what happened. Why did Terra collapse? Why is Solana down 80%, but ETH only 58%? We talk about all of these on the channel. I think we've talked about both the Terra collapse and exactly why it collapsed. The algorithmic stablecoin problem and backing it with a token that's unproven. And then obviously trying to go into backing, of course, it with Bitcoin, but a little too late. And then we talk about, of course, Solana, and it's now gone down due to its consensus mechanism of proof of stake 11 to 12 times. We could maybe call this last time a 12th time. I think it was yesterday. We talked about it before, though, as well, with their, I think it was time clock off by 30 minutes as well, which, of course, you got to be careful whenever you hear like, oh, it's behind 30 minutes, but it doesn't really matter. No, it matters, especially within the world of technology. It matters. Don't believe them. There are actual reasons, and if you learn them now, you'll be better prepared when sentiment around crypto shifts in the other direction and the next wave of impulsive swing buyers arrives. Another simple to do thing, but one you might not want to hear, is stop day trading. Hey, I'm there, boys. I don't day trade. I don't know about y'all, but I don't do it. There is still downside out there, and no one knows where the market will bottom out. Secure whatever capital you've got left and shift focus elsewhere, specifically to participating communities, actively using products, developing skills, and maybe even building something. Day trading is a sucker's game, even in boom times. But during bear markets, it's truly something to leave to the professionals. Calling yourself a degen on Twitter is less fun when your formerly hilarious gambling addiction has left you actually destitute. Spending this time learning is a path towards not just minimal self-respect, also consider showering more, but actual success. Even a level 1 crypto speculator is learning a lot about the space. And at this point in the industry's growth, that knowledge will have value even during a crypto contraction. Prominent people in the industry will become a lot more accessible in the coming months as well. So you can really lay some groundwork for a future career move. But the most important tip for surviving the crypto backlash is very simple. Stick around. The sharply cyclical nature of crypto is its biggest annoyance and opportunity because it provides new entry points for the committed while regularly washing out I don't know that word. Let me go look at that one. Let's go do it. I'm a dummy, but let's go ahead and set a good example and learn, right? All right. How do we pronounce it, though? Play it for me. Dilettante? Dilettante. I like the UK pronunciation better, bro. I'm just going to say it. Dilettante is a person having a superficial interest in an art or a branch of knowledge. Oh, that makes sense. That totally makes sense. Dilettantes. Washing out the dilettantes. Whether you're a new hire at a crypto company wondering if it's time to ask Goldman Sachs for your job back, or an ambitious newcomer hoping for a break, the biggest mistake you can make is taking your eye off the ball. You never know which way it'll bounce. And I think this is a really good article for myself as well. If you've been following on Twitter, I am extremely stressed out about the farm. We are going to be talking about that this week. Some of the mistakes I made in this particular run. I definitely did a lot better than I did last run. So I'm going to go over the positives, like the things where I was successful and was able to capitalize properly. Some of the mistakes I've made that are going to make it a little difficult to get through a bear market, where I'm at as far as all that goes. And hopefully what that's going to do is provide everybody something to learn off of for the next super cycle. And that's my goal with this channel, is to just help you guys follow through, learn from my mistakes, hopefully, right? And go from there. Now, miners are struggling not just at the low level, which we'll be getting into, like I said, this week. I'm going to try to get that out as soon as I can get, some time. I have some other stuff going on in real life that it's kind of taking up a lot of time, but, let's see what these large miners are talking about. Bear market could see some crypto miners turning to M&A for survival. It's coming once again from CoinDesk. Says companies have already survived the previous down market and have enough capital and a sound business strategy will be able to survive this cycle. Survival of the fittest. The old adage is playing out for crypto miners this year as a sell-off in the broader market is squeezing out some companies in the overcrowded industry. In digital asset mining, particularly for Bitcoin, competition has increased greatly in recent years as several new entrants joined the industry during the peak of 2021. However, with a price decline, survival of many new miners might be hanging on these companies being able to sell themselves or merge with another peer, according to industry participants. Quote, I think in the next 6 months or so, we'll probably see some M&A activity happen, end quote, said Amanda Fabiano, head of mining at Galaxy Digital, because some miners who got into the sector during the peak are just not going to be able to meet their requirements. And I think this applies to home miners as well. And we've been talking about this for a long time because a lot of people will be like, are you buying GPUs? And I had kind of slowed down when they got really expensive. And I was like, no, because I bought all my GPUs beforehand. Once again, when I talk about the things that I did right and the things that I did wrong, one of the things that I did right was purchasing a bunch of GPUs that basically gamers didn't want due to poor thermal pad placement, and they didn't want to replace the thermal pads for a discounted price before the super cycle, right? And before it really kicked off. So some of these ideas are things that I'll be covering and things for you to start looking out for, because it's not just about going out to Best Buy and purchasing all the GPUs on the shelves for MSRP. While that will still be better than purchasing GPUs at scalper prices during the next bull run, you still want to be as low as possible on your costs per hash, right? And so looking for opportunities like that are things that are going to help you be even more successful on the next run, right? Quote, I think in the next 6 months or so, we'll probably see some M&A activity. That's what she said. During the 2020 bull run of the crypto market, the margins of some Bitcoin miners had been as high as 90%, which led to many new entrants and miners looking to grow at hyper speed. Now, this is where I think I failed, because there is, and this is tricky, okay? And this is the part I haven't figured out, and I'll definitely be going into more detail. The part that I didn't figure out was how to scale quick enough to basically cover the rent costs that I have. So this is where I have failed, right? And I'll go into more detail later on, But the idea was I was supposed to have essentially 800 amps of power last July. I did not get 800 amps of power last July, partly because I went into a rental agreement that I was supposed to get that. However, that rental agreement kept getting pushed down further and further down the road. And now here we are almost going into July of 2022, and I am still stuck on 200 amps paying the rent that should be paid for 800 amps. And I have completely gone through pretty much all of my capital trying to just survive. So there is a section of like trying to grow at hyperspeed and then like just making bad decisions, right? So that's kind of how this like ends up sorting out. And I'm like I said, I want to articulate this more for you guys later on. But to do so, companies ordered mining rigs at high prices and deposited money up front for their orders. Now, this is a mistake I didn't make, right? I was making sure I had the power available to me and that sort of thing before going into spinning up a whole bunch of mining rigs and pre-purchasing a bunch, right? So these large companies, though, they're putting in large orders. This is also why I think from the ASIC mining perspective, the prices on ASIC miners haven't come back down fully to where they should be in relation to the price of Bitcoin. We've been talking about this for the last year at this point, where we keep seeing an increase in difficulty of Bitcoin despite the price. And this is because a lot of the power and the hash rate that's coming onto the Bitcoin network was all ordered last year and basically was hampered not only by, the demand, but also by, frankly, the external factors of economy and production supply chain, right? So it's making it look very, very odd right now. So I do think while this market looks different than we saw in the previous super cycle, I think a lot of that is specifically due to this combination of not only the traditional super cycle, but also what's going on in the real world, right? And what is happening with supply chains and so on. So I think it's kind of combining to create this weird illusion of increase of difficulty and hash rate on the Bitcoin network, even though the price is going down. Fast forward to 2022 and Bitcoin prices have tumbled and margins have shrunk. Bitcoin's network hash rate is hovering around all-time highs and operating costs are higher due to rise in energy prices, leaving miners in a very tight spot. A falling Bitcoin price means miner margins are compressing, said Mason Joppa, co-founder and CEO of blockchain infrastructure and cryptocurrency mining company Blockware Solutions. On top of that, margins have also been declining because Bitcoin's network mining difficulty is increasing as more miners are joining the network. Like I said, I think this specifically has to do with the supply chain being kind of bottlenecked and everybody ordering a bunch of rigs and them not even coming in till this year. And so we're getting in this weird spot where we're still seeing an increase of network hash rate, right? Many of these companies that came into the mining sector in the last 12 to 18 months lacked a sound balance sheet. Mike Levitt, CEO of Core Scientific, the largest publicly traded miner in terms of hash rate, told CoinDesk. These companies have found themselves in a position where they made plans and commitments that assumed external capital, whether from public or private markets, would always be readily available, he said. Now the cost of capital, if available at all, I'm adding the at all there, just got more expensive. And some of these miners do not have sufficient capital to finish what they have started. Now, this I can relate to. I do not have sufficient capital to finish what I've started. So I'm about to end up with 800 amps, high rent price, and 200 amps of equipment, not able to expand quickly enough. Now, because I don't have the capital to fill up another 600 amps. I have a few strategies I'm going to be talking about trying to figure out how to do this. But as it sits right now, because of basically the entire market and the economy and the way it runs, I couldn't even go out necessarily and get a loan to fill up those 800 amps because getting a loan at this point, especially for a cryptocurrency mining operation, is going to be near impossible, right? Moreover, supply chain issues and lack of access to capital are making matters worse for many miners. The ability to secure large pre-orders of ASIC miners is no longer the major bottleneck to growth, said Wall Street Bank Jefferies analyst Jonathan Peterson in a research note. And this makes sense, right? As opposed to last year where it was really easy to get capital, whether that be from borrowing it or publicly traded offerings or whatever it may be. Last year, that money was accessible, but we had a bottleneck of supply chain. This year, it's the inverse, right? You're not going to be able to get the capital, but you'll have basically the supply chain solved because the demand's going to be significantly decreased. Construction delays caused by difficulty securing building materials and finalizing power purchase agreements are large impediments to deploying new fleets. Once again, I highly relate to this. Obviously, what ended up happening for me is a large delay in finalizing power purchase agreements and so on. And this is just the way it ends up playing out. This perspective was echoed by crypto miner Hive Blockchain. Quote, the crypto mining industry in general appears to find itself at a crossroads with a supply of very expensive ASIC chips and few places to plug them in, according to a statement from the miner. In our market intelligence, the company has noticed significant supply disruptions for electrical equipment needed to make data centers, such as transformers and switchgear. All these factors combined, and some of the newer and less capitalized miners are now in a limbo as they are finding it hard to pay for their operations under the terms set out during the bull run. Quote, I think we're going to see miners get humbled this year in contrast to last year when we saw the rise of public miners, Fabiano said. Some of the miners who have signed some longer term contracts will have to put a lot of money in order to satisfy those obligations, she added. On top of that, the ASIC markets are shifting downward, which means that miners are not going to be able to make the profit that they could have on the secondary market by just selling their machines if their operations aren't up and running, according to Fabiano. In fact, with the slide in Bitcoin prices, some of the older mining rigs, such as Bitmain's Antminer S9s, are becoming less profitable, leading to miners shutting them down to avoid shouldering the costs. Now, this is interesting. I don't know if you guys remember, but I had talked about talking to some ASIC miners that were purchasing a bunch of S9s. Now, in Texas, it's a little bit easier because a lot of the guys that were doing this were doing it with flare gas, and I think they'll be okay, right? Because the way the power cost structure goes into play. But I know that now, obviously, those S9 margins are extremely low, and they're only going to get lower. Even running something like flare gas where you're paying 2 to 3 cents a kilowatt hour due to the fact that we're going to have newer and newer miners coming on, and they're starting to get shipped out now, right? So I don't know if that was a great idea, leading to miners shutting them down to avoiding shouldering the costs. This is likely to drive several miners to look for an exit strategy by selling their business or merging with other companies. Quote, I think the ones that have no operational experience, no background in Bitcoin mining are probably the ones that will look for M&A. Or they'll have a distressed debt situation where they're taking on expensive debt, she said. This tight market environment has already led to larger, more established miners such as Core Scientific and Bitfarms to lower their hash rate growth expectations for the year to a level that is more serviceable via capital they already have on their balance sheets. Meanwhile, Marathon Digital remains cautiously optimistic about their hash rate growth outlook. With larger miners reining in their growth outlook, the newer and smaller miners are likely to be in a tougher spot. I think the newer and smaller miners have the largest opportunity here, right? Because as these larger miners get pressured, the smaller miners will be able to capitalize on the lower prices of equipment, hopefully, right? This will probably lead to mergers fairly quickly, given how long these new entrants can actually withstand some of this market volatility in a bear market. According to Michael Ash, head of investment banking at Galaxy Digital, he said, quote, I think we're going to see all different shapes and forms of M&A opportunities in this cycle, he said. In fact, Core Scientific has said that the company is already getting calls for M&A from miners who are feeling the squeeze. There are a number of folks that have commitments that were dependent upon their being able to raise additional capital, and they're finding it challenging to raise that capital, said Coors Levitt during a conference call, adding, "We're starting already to have to be approached, frankly, with opportunities." Core Scientific will look at two types of potential M&A deals. One is cheap mining companies, and the other is a business that helps the company grow, Levitt told CoinDesk. Those are the two areas we're looking for. It's either value or growth, and if you're really lucky, it's a combination of both, he said. Moreover, he is also getting calls from other parts of the mining ecosystem, including companies with electrical equipment and power providers who now suddenly have a surplus of both and need buyers. Quote, companies that did not prepare for this downturn have very difficult strategic decisions to make. In terms of consolidation, we appreciate the current complexities in this industry and will continue to look into acquiring the best in class of our industry as we are presented with those deals, end quote, Levitt added. Miners who are more capitalized and have a solid strategy will likely find such a market an opportunistic one to pick up assets or companies at cheaper valuations. Yes, that is what we're looking for, especially. See, one of the things that I've talked about on the show a lot is like, especially when it pertains to Bitcoin mining, is like this bull run cycle where it's impossible for the average Joe to get into cryptocurrency mining. And when you experience a bear market like this, it opens up opportunities for people at lower to middle class to start getting into it. So it does end up having a positive effect, because eventually also what that hopefully means is that we have stronger decentralization. And by that, I mean a more spread out hash rate across the public, and less of it being concentrated on large companies that are able to spin up a ton of capital, because that capital is going away for them. This cycle is an interesting opportunity from an M&A perspective, because you have to do some of these more established miners who have already weathered the past bear markets and will now look at this opportunity to go out and acquire equipment and real estate at attractive values, said Galaxy's Ash. Now, real estate will be an interesting one to get a hold of, because obviously, as you guys know, we're kind of in some sort of, I want to be careful because I'm not a real estate expert. The way I perceive it is some sort of real estate bubble. Preferably, ideally, that pops as well right now, right? So that you can acquire real estate at a reasonable price. That's what I would be looking for. With publicly traded mining equities down on average more than 50% this year, investors' confidence in the sector might be shaken. However, this could be an opportune time for longer term investors to bottom fish for attractive value. Quote, timing the exact bottom is not easy, but many on-chain and market indicators point to now being a good time to accumulate both Bitcoin and Bitcoin mining rigs, end quote, said Blockware Solutions Japa. So then, what should the investors look for in a miner to sort out the winners? One answer is to look at past downturns. Quote, the miners have survived the bear markets in the past, are still going to be the ones that survive this next round, end quote, said Galaxy's Fabiano. Being extremely opportunistic over the next 6 months with ASICs as their prices drop, while also having a really strong strategy for growth on the infrastructure side, will be an amazing way for miners to really separate themselves from the masses. Miners who are prepared and have the latest generation equipment with locked-in power rates will be able to benefit from the current market conditions, said Zach Bradford, CEO of Bitcoin miner CleanSpark. Now, that is one thing I did do good. I have locked in my power rates for over 3 years now, and I have locked in my rent. So I have completely fixed costs. The only thing I have to do personally is spin up enough capital to fill out the amount of power I have. And then I'm golden. But we've talked about this before, trying to get those rates locked in and so on. This stage in the business cycle will reward miners that have consistently delivered value to their shareholders and the Bitcoin ecosystem, he added. Another crucial factor to consider is the miners that are already sitting on cash and are still able to access the capital markets to finance their growth. I do not have that. Quote, as the Bitcoin mining industry funds more of its growth with debt, we expect the profitability of miners to continue to diverge with the larger public miners, widening their cost of capital advantage, end quote, wrote Wall Street investment bank BTIG's analyst Gregory Lewis in a recent research note. Digging deeper, Jeffries Peterson sees larger miners such as Marathon Digital and Core Scientific at a relative advantage compared to smaller miners when accessing debt financing. I would agree. He also expects companies to start selling some of their mined Bitcoins that they usually hold on to their balance sheets in order to pay for operational expenses. I agree. This has been a repeated process. Recently, miner Ergo Blockchain said during its first quarter conference call that it is raising debt and selling a portion of its mined Bitcoin to cover some of its expenses. Meanwhile, Core Scientific said it sold some of its mined Bitcoins this year and will continue to do so. Other miners, such as Marathon, also said that they are considering selling some of their mined Bitcoins, while peer Riot Blockchain has already started selling its mined digital assets. Once miners start selling their Bitcoin like this, you know you are in a bear market. You know it's the crypto winter, my friends. This happens every single time. My question is like, who's the guy that's doing the opposite strategy and selling all their Bitcoin during the bull run and then basically using that as capital to invest later? I feel like that would be a better strategy for this next run. I'm just saying, taking that outside perspective, I'd be mining up all that Bitcoin right now, living off that capital I made before. You know what I'm saying? And sell it. Anyways. Tying it all together, Arcane Research's analyst Jaron Mellerud wrote in a recent report that to gauge which miners are the best prepared to get through the bear market and eventually potentially capitalize on it by buying assets of distressed competitors, it's essential to look at two factors: each company's Bitcoin production cost and the strength of their balance sheets. Based on the most recent information, Riot Blockchain has the lowest power prices among the top 5 miners by market cap, only paying $24 per megawatt per hour. That's 2.4 cents per kilowatt hour, he wrote. He also noted that power prices have likely increased for all mining companies in recent months. Quote, overall, based solely on its low power costs and healthy balance sheet, Riot seems to currently be the strongest position of the 5 biggest public miners by market cap, he said. The bottom line is that investors trying to pick winners in a down market should look for miners with traits that include proven operational track records, lower costs, and good treasury management strategies and hedging options. Boom. There you go. I think that was an extremely informative article, even though it does focus on the large mining companies, as this leaks on me. I think it can be applied to a lot of the small home miners as well as you look into what you're going to be doing. Now would probably be the time to try to lock in power costs of some sort. Now would be the time to lock in your expenses. If you're gonna lease, I don't recommend it because I think that's probably the part where I've really failed. But if you were gonna lease, you find out what that number is going to be and you lock that in for a long term. If you're going to buy property, maybe wait until something happens with real estate. I don't know exactly what that will be, but I assume that will happen at some point as well. I could be completely wrong, and this isn't financial advice, but get ready to be able to purchase some property where you're able to actually get power out there, that sort of thing. It's accumulation period. That's what it is at the end of the day, right? The question will be can you accumulate properly and still survive? What kind of outside additional income revenue streams are you going to look at? And are you going to educate yourself on the wider crypto market as well, which is something I've been trying to do as of late. Of course, Examples, even on the YouTube channel here, starting to play more with Web3, play more with Flux, get more familiar with different coding languages, whatever that may be. Some developers will become more accessible because they'll have more time, because they won't be getting inundated with stuff. People like myself who are inundated during a bull run with just absolute madness in emails, scheduling appointments, and so on, I'll be more accessible. So you'll be able to reach out to me and get communication from me a lot easier during these times. So you can get information from me there, like people like Red Panda Mining. Bitsby Trippin will have a little bit more freed up time because the inboxes won't be as full. Use this time to reach out to all those. Now, if there are developers and so on that disappear during the bear market, then if they pop back up during the next bull run cycle, you know who to avoid, right? So these are all the same kinds of things that will repeat themselves. It's a cyclical thing. It is, at the end of the day, in my opinion, still a positive and the most opportunity. But I won't lie, personally, I am stressed out trying to figure out how I'm going to survive, right? So my costs just in general living outweigh, of course, the amount of revenue I'm able to generate in a lot of areas. I'm working on that. Some of those things are outside of my control. It's why you've seen me probably get really into like a lot more stoicism, etc. Is trying to remind myself to just focus on the things that I can control and move from there. That sort of practice is going to be super helpful. And then, just trying to remain, I guess it's easy to be humble when it's in a position like this. Obviously with the YouTube channel as well, it does mean that one of my revenue streams is directly related to cryptocurrency. I have to figure out that as well, from that perspective. So I think like a lot of us are going to be going through the same things, and I think there's a lot of opportunity here, but it will be extremely, extremely stressful. Let's get into mining profitability after the ad. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, we're back. Sorry for the black screen a little bit there. We'll get to questions and answers here in a little bit. As of yesterday, you guys know that I had a ton of mining rigs down. I've gotten a majority of them back up, and they have remained stable. My largest problem appears to be with Team Red Miner version 0.1 and specifically R mode. Now, I had also attempted to just turn off R mode and continue to utilize Team Red Miner, but now for whatever reason, those rigs need full reflashes to become stable on Team Red Miner. So most of them, just so I can get back up and running, have been moved back over to LOL Miner. I was also having some issues with T-Rex Miner. Oddly enough, I haven't really sat down to figure out what's going on with T-Rex Miner, so I don't know from that perspective. I do know that R mode will remain and appear stable for quite a few hours before finally just taking a dump. Unfortunately, it seems to be hard dumps where the whole entire rig, and this is multiple rigs. We had, I think it was, what was it, 4 rigs? yesterday online running on R mode. So I'm kind of like paused there. I do have another rig, the RX 6000 series rig, that's having very odd behavior that appears to pertain to possibly my first ever failure of an ASRock H110 Pro BTC motherboard. I replaced the CMOS battery because the BIOS settings were resetting and re-enabling CSM, which is the security module that essentially, if it's enabled on that particular motherboard, will not detect over like 6 to 7 GPUs. So you have to disable it. So I was having to go in, disable CSM and then get all the GPUs replugged in and boot up, and then it would run for a while. Then on a reboot, it would lose all that memory. So I thought it was CMOS battery. So I replaced it with a brand new CMOS battery, because obviously, like, if you have basically any sort of BIOS reset, that's typically what it has to do with. Thing is that didn't appear to solve it because it's down right now. That being said, we did a lot better over the past 24 hours with an average of 4.79 gigahash, which is much better than that 1.3 gigahash we were sitting at for the past 24 hours as of yesterday. That is upping us, kind of into the green, but barely, and that is dual mining ZIL and Ethereum. So that total is giving us like 0.058 Ethereum a day and 101 ZIL, totaling out to 110 US dollars. Margins are pretty dang low right now. I do have to get this back up to like 6 gigahash. I'm having a few other issues as well that we'll kind of be discussing, but here's all the rigs. For example, this rig 01 is having some issues continuing to run. It restarts itself essentially. Probably if I refreshed, it's running again, but the RX 6000 series is also down. We're showing 5 gigahash flat, 22 GPUs offline. So I have 2 GPUs offline on rig 09 here that you can see. And then I have another one down on this 5700 XT rig, which would bump us up over to 400 megahash a second on that. I have a ton of work at the farm, and it's extremely hot. Meaning that, like, like when you're extremely dehydrated and it's just like dark yellow when you're trying to take a piss. That's where I'm at this morning, waking up, just trying to work at the farm. I didn't hit the sauna. I skipped the sauna now to go work at the farm. And the farm is a sauna. So I am getting extremely dehydrated, which is also obviously affecting not only my mental capacity, but my ability to get videos done too. It's just one of those things. If I can get the farm stable again, I think things will be pretty good. As of right now, I'm struggling. It's like getting into like midsummer. I don't have the ventilation I was supposed to have. It's just it's just stressful. But if we look at power consumption, and because I think this was asked yesterday, as of right now, we're at what? 5,000 divided by 1637, something like that. Nope, that's wrong. Hold on, 16,000. Is that right? No. Yeah, that's right. So we're at 0.3 mega hash per watt right now on efficiency. Total farm efficiency for the GPUs, not including the ASICs. I do currently have some ASICs running as well. We have the Antminer L3 Plus still running. We have the Z9 Mini on Zcash, which probably needs to get turned off. We have the Mini Doge, which is still in profit but barely making anything. And then we have the library tokens because I support library, but that one doesn't make any money either. And then we have the Handshake mini miner from Gold Shell, which is not really making anything either at this time. Let's check what to mine. Bam. Let's correct the ZEL hash, the Kapow, the ProgPow, And the Firo pal. All the pals, and calculate that bad boy out. Cerro is in number 1 at $3.02 a day before power and $3.23 a day after power. I am fully aware everybody's asking me for a how to mine Cerro. I feel like a majority of you should know how to do this already as far as overclocks if you've done any mining experience with Ravencoin, Firo. You should already have those overclocks ready for Cerro, okay? I will try to get how to mine out. It's basic though. I think most of y'all can do it. Once again, when you start seeing these though, be extremely careful. Cerro, for example, doesn't have large liquidity options. You do have like what? Gate.io. We'll pull this up here. Let me get it up for us. CoinMarketCap. But it's not going to be like Ethereum where you can just sell it at any time, right? So, and in a bear market, that can make this extremely difficult as well. So just be careful when you look at it. I think it had a recent pump too, and then it had a recent pump that then came back down. What are the markets it's on? I'm scrolling down here. Yeah, so it is on Gate.io, MEXC, Token Chain, and Hotbit, with most of it being on, it looks like MEXC, or is it on? No, Gate.io. But you can see the volume's extremely low, so liquidating is going to be a little bit sketchy. But your best bet is to liquidate to USDT on Gate.io or MEX. So there you go. Ethereum at $2.69 a day in revenue, $1.92 a day after power. Zano, $2.51 a day before power, $1.72 a day after power. This is at 10 cents a kilowatt hour. Ravencoin at $2.38 a day in revenue and $1.59 a day after power. Firo at $2.37 a day in revenue and $1.62 a day after power. Conflux at $2.35 a day in revenue and $1.56 a day after power. Flux at $2.02 a day in revenue and $1.32 a day after power. Still more profitable on NiceHash at $2.10 a day in revenue and $1.40 a day after power. Ergo at $2.01 a day before power and $1.39 a day after power. Rio down here at $1.88 a day in revenue and $1.26 a day after power. ZIL Classic at $1.86 a day in revenue and $1.16 a day after power. And Ethereum Classic at $1.85 a day in revenue and $1.09 a day after power. Mining pool profitability for the last 90 days. F2 pool in first, mining pool hub in second, Ether mine in third. For the last 60 days, F2 pool in first, Ether mine in second, mining pool hub in third. For the last 30 days, Ether mine in first, nano pool in second, F2 pool in third. For the last 21 days, ZET in first, nano pool in second, F2 pool in third. For the last 14 days, ZET in first, nano pool in second, F2 pool in third. For the last 7 days, ZET in first, nano pool in second, mining pool hub in third. For the last 3 days, ZET in first, nano pool in second, mining pool hub in third. For the last day, mining pool hub in first, ZET in second, and flex pool in third. If we check Ethereum Classic, it typically follows around the same or a little different. Okay, so let's go over Ethereum Classic because I know some people are looking at this. Ether mine in first, ZET in second, mining pool hub in third. For the last 60 days, ZET in first, Ether mine in second, mining pool hub in third. For the last 30 days, 2 miners in first, Ether mine in second, mining pool hub in third. For the last 21 days, 2 miners in first, Ether mine in second, mining pool hub in third. This is telling me since 2 miners is kind of hitting the top here, we are starting to see maybe some at-home miners shift to Ethereum Classic. Last 14 days, 2 miners in first, mining pool hub in second, Ether mine in third. For the last 7 days, ZET in first, 2 miners in second, mining pool hub in third. For the last 3 days, 2 miners in first, mining pool hub in second, nano pool in third. And for the last day, ZET in first, mining pool hub in second, and 2 miners in third. Ravencoin is at 2.59 terahash a second right now. Let's check the big daddy, Bitcoin. Bitcoin's at 230 exahash a second. We saw that dip in, of course, difficulty. I kind of expect Bitcoin to dip a little bit further in difficulty, but we'll have to wait and see. Now, Ethereum is down to 1.07 petahash a second from 1.09. However, of course, the difficulty is not changing much because it is artificially increasing. Ethereum Classic is still down at 25.5 terahash a second, and the difficulty is unchanged from yesterday. Flux is all over the place. It's hard to really regulate it, but still right around that 1.5 mega solutions a second with a bouncing difficulty depending on when people are renting from NiceHash. Let's look at Cerro, because that's another thing to talk about. It is the most profitable, but you have very few pools available. You have Cerro.cash, you have Gong Pool, and you have Cardum Pool. All of these are kind of all over the place. It looks like the US miners, home miners, are starting to hop on the network here. You see this recent increase on June 1st due to it being at the top of the charts. Be extremely careful. That means that we will see probably a corresponding difficulty increase and your profitability go down. Plus, that does mean because of the low volume on the exchanges, you could get yourself into a pickle. Ergo. $13.5 terahash a second on the network. And difficulty starting to go back up as we speak. ASIC miner profitability. 10 cents a kilowatt hour. The KD6 is up $2 a day from yesterday. The KD5 is up a little bit too, maybe like $1 at $17.42 a day after power. And then we have the S19 Pro at $12.55 a day on Digibyte. Digibyte really making some waves here for the SHA-256 algorithm. So there you go. Okie doke. Let's get into questions and answers. As always, super chats are never required. Always appreciated. First to be answered because they are the easiest to see. Then tagging at Son of a Tech will make it easier. I want to give a shout out to R252 for the $9.99 super chat. Said, keep on keeping on. Hope you enjoyed the spicy honey. I haven't tried it yet, I'll be honest. Chadwick's Racing, thank you for the $20 super chat. Says, keep calm, mine on. And thank you for, of course, the access to the 6650 XT for testing. That will hopefully also be out in a review this weekend. All right. We've approved everything. Chadwick says farm is the sauna. Agreed. Nick L says, ask Tech, any idea how to get Cerro working with the RX 580 and 480 cards? No, not on Polaris necessarily. Anonymous Miner says, ask Son of a Tech, have you thought of using the 5500 XT? I'm getting 28 megahash a second with 44 degrees on the core and 64 on the memory. Might be worth looking into for temps and 55 watts on Hivon. I still am going like the 1660 super routes, I think, more than likely to fill out the wattage, just because that's, and I want to do like server cases as well. My capital is gone though. It's like gone. Panzer with the $5 super chat says, I appreciate your honest opinion. Greetings from Miami. Stay like you are. Thanks for watching, Panzer. You've been here a long time. The Mag says, at Son of a Tech, what was the deal with Gate shutting down in the U.S.? Any word when the U.S. site will be back up? I feel like most mineable coins won't be tradable. This is going to be a problem, obviously, within the U.S. We talk about it within my what our VPNs used for video. Hint, hint, not condonable, blah, blah, blah. It is what it is, right? Right now, Trade Ogre seems to be the one that holds a lot of these like shit coins that you can go ahead and trade. Cerro, for example, MEXC will be an option, I think, over Gate.io, personally. The Mag says, or not, we already did that one. Pay Me in Crypto says, at Tech, can you explain why Digibyte has so many algo variants? Are they different coins? No, they're not different coins. They just have different ways you can mine them. So they're a multiple algorithm coin. So you can mine it with multiple variants. This was a thing that was done on multiple projects in the previous super cycle. It was considered to help increase security on the chain. Now, whether or not that's actually true or proved out to be true, I do not know. But I do know that that was originally why they said it, right? Dan San says, and that's because the more algorithms you have, in theory, the more type of equipment that can mine it. And that means more opportunity to increase security without utilizing newer options, which are obviously like Komodo, for example, that allows you to pull security from the main chain while spinning up a new coin. See, early on, you would have essentially, you wouldn't have any other security to pull from if you chose a single algorithm like SHA-256, for example, and that was the only thing providing security. Somebody like a single farm, for example, on Bitcoin could temporarily move over and obviously compromise your network. So to prevent that, they would create coins with a ton of different algorithm support so that they could boost the security of the network upon launch. Some of them eventually just moved to a single algorithm. Some of them went away completely, obviously during the bear market or the previous winter. And some of them just never upgraded, like Digibyte, for example. Dan San says, ask Tech, wear a camel bag on the farm, easy water on demand. I have big waters. So, Chadwick Tracing says, ask Tech, I'm really interested in your thoughts on strategy going forward. Get a job, piling cash from that. The hard part is getting the job. So, there's too much stuff in my personal life that affects that I can't really talk about. I don't really want to talk about on the live show. I'll put it that way. That's kind of where I'm at. A lot of my focus is on the kids right now. So, yeah, that's where we're at. Tricky Mick Mining says, "Ask Son of a Tech, no sound." I am getting sound showing here, and it appears people are replying to what I say. So, maybe go ahead and try to unmute. Mike Lyons says, ask Son of a Tech, is Conflux a coin worth mining, or is it hard to sell as well? Pretty much everything is hard to sell. If we're looking at like shifting, Flux got way easier because within Zelcore Wallet, you can basically do a fusion transfer to Binance Smart Chain, which is basically a Binance wrapped Flux, and you can send that to crypto.com. That's one of the easiest ones. Obviously, Ethereum Classic is extremely easy, but I'd recommend Coinbase for Ethereum Classic. Yes, crypto.com is a sponsor, and I hope that you guys use them to help support the channel. That being said, their confirmation wait times for Ethereum Classic is days as opposed to Coinbase, which is pretty much right away. So if you're going to go Ethereum Classic, though, that's the easiest one to liquidate. And then from there, everything else gets pretty dang sketchy, right? Crypto.com has added support for Ravencoin, but no deposits are allowed, so that doesn't really work. Ergo, once it gets its Ergo Dex gets integrated with Cardano, I believe becomes a lot easier, but right now Ergo's pretty difficult to liquidate as well. So as far as liquidation tier lists, it goes Ethereum Classic, then Flux, then everything else. As I see it right now with the tools I have available to me, that's how I see it, right? Ethereum Classic, easiest to liquidate. Flux, second easiest to liquidate. Everything else, get ready. It's sketch. We have $1.99 super chat from 4EMH, says, thanks for all your efforts. Stay strong. We all going to make it. That's the goal. Panzer says, ask Son of a Tech, according to JP Morgan, a financial hurricane is coming. So I think miners are on the right track. Am I wrong? So we have a lot of weirdness going on, right? Like we had the World Economic Forum say something to the effect of praising China for shutting down supply chains as part of a reset of the economy. Does that mean we're opening back up, or can we expect more shortages? And this is why we on Twitter, I said something to the effect of like, everybody's really scared of buying, but the prices are going down. It makes me think right now is the time to buy, like equipment, etc. And the reason this gets kind of like compounded is the fact that like, if we experience additional supply chain issues, then we end up in a weird position where, and plus, you know, obviously huge economic downturns in the value of fiat currencies, then you end up with miners that have access to silicon that nobody else has, and it turns into some weird Mad Max world. Then sure, where the shortage is silicon, the shortage is not necessarily like gas or whatever it may be, even though those shortages will be coming as well. I don't know. I think though, still like the best things you can do is, you know, hone your skills for whatever, like skills that provide some sort of value. I think an outside skill too is good. And by that, I mean a non-online, non-coding skill, whether that be being a plumber, installing septic tanks, installing, you know, whatever that may be, generators, whatever, right? Mastermind with the Canadian 99 cents. Thank you, good sir. Gandalf Gray says, Ask Tech, keep your head up and remember the storm parable. And remember you have the community to support you. And thank you, good sir. Felix Moore says, Ask Tech, if you are on Bitcoin Pro motherboard, check the EFI update beta. It's set to default CSM to disable. Okay, I'll see if I'll just update the board to that, and then maybe that'll fix it. Thanks for the tip. I thought I had updated it, but you're saying there's a beta update. Okay. Felix Moore says, I mean, the one you said was resetting. Yeah, I'm on the same page. I have a ton of ASRock H110s. This is the first one that's given me issues. All right, it's 11:05. I'm going to wrap it up for today. I want to thank everybody for the support. We're still maintaining over 300 concurrent viewers. I was hoping we're going to continue to go up and be above that 500, but we are in a bear market. It's the crypto winter. The 300 of you that keeps showing up every day and we make it through, I think we're going to be looking real good in 2024, 2025. Let's figure it out together. Like I said, I will be talking about issues I'm having, survivability, etc. Definitely not going to sell any of my equipment. I hope I can make the Mining Farm LLC survive. Like I said, I'm in a weird position and we'll have to figure it out, but it is what it is. Hit the like, comment, subscribe. I will be skipping DreamHack, making more content for YouTube. This week has been single dad life, and I have not had the dedicated videos releasing. I apologize for that. I'm trying. But I'm also trying to maintain some of the physical activities, obviously. So jiu-jitsu, so on. That's where I'm going to head to now. And maintain taking care of the farm, which has been just absolute nightmare this week. So we'll have to go from there. There was a great video by Bitsby Trippin too, talking about what a miner does, like what Bits does during these times. He's survived a few bear markets. Go check him out for that. And definitely check out the Clips channel. I need more support over there. We need to get that channel monetized. In fact, let me go look and see where it's at as far as getting monetized here. Let's switch profiles. I think it's getting close, but it's one of those ones where it's starting to get to the point to where it has a few one-off videos that hit really good, over 1,000 views. And then it kind of peters out, right? So I definitely need support over there because a large part of our revenue was specifically, here we go. I know the cursing is blocked, Mastermind, give it a break. was specifically a lot of the revenue was because we were putting the clips on the same channel. I'm trying to fix that, but a part of the problem is fixing that is definitely hurting the YouTube revenue. That being said, I think it'll be best for the long run, and I think it's one of those long-term things that will be, you know, let me check monetization here. That will be beneficial later on. So right now it's at 1,549 public watch hours. I'll show you guys the details here. So to get YouTube partnership, or to where we can apply for it, we have to have 1,000 subscribers. We hit that, so thank you guys very much for that. Obviously, two-step verification activated, and we don't have any community guideline strikes. I don't foresee any of those being a problem right now at this point. But we're at 1,549 public watch hours. We need to be at 4,000 watch hours to essentially apply for monetization on that channel. So that's the help I request from you guys. If you find something informational within the morning live show and you want to just share out a portion of the crypto mining morning show, like let's say we did the one segment today on the mining, right? That one segment will be posted separately to the Clips channel. Let's say you just want to share that out with people. Go find it on the Crypto Clips channel. Don't just share out this whole show. And that way you have like a clip and you can be like, hey guys, this part was super informational. Go check it out. And then obviously there's methods that we're using to redirect people from the Clips channel to over to the main channel and so on. It's just, it is what it is. So, and then as far as all that goes, I'll see you guys next Tuesday.